Welcome to Stock Tech Hub. Let us understand about stock trading, where we'll demystify the world of stocks, futures, and options using a relatable analogy involving different types of cars. Whether you are a novice investor or a seasoned trader, understanding these concepts through the lens of automobiles will make navigating the financial markets a smoother ride. Stocks, the family sedan. Think of stocks as the dependable family sedan of the investment world. When you invest in stocks, you are essentially buying a share of ownership in a company. Similar to driving a family sedan, investing in stocks provides stability and predictability over the long haul. While the journey may not always be flashy, it offers steady growth potential, much like the reliable performance of a sedan on the road. We can further define stocks as per their market capitalization, number of shares * current market price. As per SEBI guidelines issued on the 6th of October 2017, the top 100 companies on NSE as per highest market capitalization are large cap. The names shared here are based as per December 2023 data available on NSE site. 1. Large cap stocks. For market capitalization, the top 100 companies as per highest market capitalization are listed in large cap stocks. Characteristics. Large cap stocks belong to well established companies with substantial market presence. They are often industry leaders and have stable revenue streams. Investors consider large cap stocks relatively safer due to their stability. Reliance Industries Limited with 17.49 lakhs crore topped the list and was at number first. IRCTC was at 100th number with market cap of 71,000 crores. Mid-cap stocks. Market capitalization. Mid-cap companies fall within a market capitalization top range of 101st company to 250th company. Characteristics. Mid-cap stocks offer a balance between growth potential and stability. These companies are beyond the startup phase but still have room for expansion. Investors seeking moderate risk may consider mid-cap stocks. At 101st rank, Marico Limited was having a market capitalization of 70,967 crores. And at 250th rank was JB Chemicals and Pharmaceuticals Limited 25,189 crores. 3. Small cap stocks. Market capitalization. Small cap companies have a market capitalization top range below 250th. Characteristics. Small cap stocks are often more volatile and can experience rapid price fluctuations. These companies are typically younger and have higher growth potential. Investors willing to take on higher risk may invest in small cap stocks. At 251st level, the very top small cap company is IRB Infrastructure Developers Limited with market capitalization of 25,092 crores. Few others are Godrej Industries Limited with 25,065 crores, the Ramco Cements Limited 24,110 crores, and so on. Remember that the classification is based on market capitalization, and each category has its own risk-reward profile. Investors choose stocks based on their investment goals and risk tolerance. 2. Futures, the sports car. Now, let's rev things up with futures trading, which can be likened to driving a sleek sports car. Futures contracts allow traders to buy or sell assets at a predetermined price on a future date. Like maneuvering a sports car on winding roads, futures trading offers adrenaline-pumping action and the potential for quick gains. However, it also comes with high risks, requiring skillful handling to navigate the twists and turns of the market effectively. Futures in the stock market are financial agreements that obligate parties to buy or sell an asset at a predetermined date and price. Here are the key points about futures. 1. Derivatives. Futures are derivatives, which means their value is derived from changes in the price of an underlying asset. 2. Obligation. A futures contract obligates the buyer to purchase or the seller to sell the underlying asset at a set price, regardless of the current market price, at the expiration date. 3. Underlying assets. Stock market futures can be based on individual companies' shares, speculating on the future value of a specific company's stock. Stock market indices, such as the Nifty 50 and Bank Nifty. Commodities, gold, copper, aluminium, cotton, crude oil, etc. Currency, USD INR, EUR INR, domestic currency, and EUR USD, GBP USD, cross currency. 4. Hedging and speculation. Hedging. Investors use futures to hedge against unfavorable price changes in a company's shares or an index. Speculation. Traders use futures to profit from expected changes in stock prices. In summary, futures allow traders to lock in the price of an underlying asset, providing opportunities for both risk management and profit. 3. Options, the convertible. Next up, we have options trading, akin to cruising in a convertible. Options provide traders with the right, but not the obligation, to buy or sell assets at a predetermined price within a specified time frame. Much like the versatility and freedom of a convertible, options trading offers flexibility and the potential for rapid acceleration in profits. However, just as driving a convertible requires careful attention to weather conditions, options trading demands strategic decision making and risk management. It is to avoid getting caught in a storm of losses. In the context of the Indian stock market, options trading. It is a fascinating and dynamic strategy within the realm of derivatives. Let's explore the key aspects of options. 1. What are options? Options are financial contracts that grant the buyer the right, but not the obligation, to buy or sell an underlying asset, such as stocks, commodities, or indices, at a specific price, strike price, before a certain date, expiration. There are two main types of options. Call options. These give the right to buy an asset at a predetermined price before the expiration date. Traders often use call options when they expect the asset's price to rise. Put options. These give the right to sell an asset at a predetermined price before the expiration date. Traders use options if they anticipate the asset's price will fall. Why use options? Flexibility. Options provide flexibility and can be used for various purposes. Speculation. Traders speculate on price movements. Hedging. Investors use options to hedge against potential losses in their portfolios. Income generation. Options can generate income through premiums. 3. Challenges. Volatility. Options can be volatile, and predicting market movements is challenging. Learning curve. Understanding options requires knowledge of market dynamics, time decay, and other factors. Whether you are seeking risk management tools or exploring new investment avenues, navigating the world of options with confidence is essential. Thank you for watching and learning something new. As with any journey, it's essential to choose your vehicle wisely and drive with caution to reach your financial destination safely. Happy trading!